Hello traders, this is Damien. Much has been asked for me to provide a video of the trading session on the lower time frames. My chosen time frame to trade for intraday trading is the 233 tick chart. I like tick charts because they are an excellent measure of price action. They're not time based, they are based on number of transactions. So the 233 tick chart measures 233 transactions before it prints another bar, and it's a truer measure of price versus time based. That is why I like them. The swings are cleaner and to my eyes are easier to trade. I also trade the swing time frame, the 60 minutes. I have 3 trades open right now that I keep those until they hit profit target. I don't trade them much anymore. I've done so now that I'm doing this thread. I was only trading the shorter time frames, but why not take advantage of the larger time frames as well. But let's get into this. We won't delay this anymore. I get into the office about 7 in the morning, and I trade through about noon or till I hit my target. My target is anywhere between 50 to 70 pips. I don't get greedy. Once I hit somewhere in that ballpark and I feel satisfied, depending on time, I'm done for the day, and answer questions or make videos or what have you. So this is what I saw when I came into this morning. When I got in this morning, price action was right around here. Was when I got in. I'm just letting you know that so that you completely disregard from here forward, as we would have to assume that none of that happened, and that's where I took my trades. But in the overall analysis that I do, I zoom out and I look at order flow, and I look for any potential patterns that are either forming or maybe forming or have just completed. So right off the bat, I see that I have a nice retracement here, very specific to this swing. So I say this is the main and this is the dominant swing. So I will go ahead and take a measurement of that just for orientation and see what pattern lines up. And I see that I have just about a 786. So I have an aggressive C opportunity, a potential ABCD, a potential Garley. It's too early to tell. Okay, so I see this nice one here, I see this nice correction, and then I see a price corrected up to here. So we can go ahead and let me change the color of that so that again we don't start getting confused, and I promise I will keep things pretty clean. And then I take a measurement of this, and I see a double top with an aggressive C sell opportunity. So that tells me, we're in a zone here, we're in a zone here for a Garley pattern. Okay, so now that we know that we're in a potential Garley pattern, I will take this extension right here, not this extension, but this swing, copy it and paste it off of the high of this swing. Okay, and now I know that I'm looking ballpark somewhere in this neighborhood to be into the completion of this potential Garley pattern. Okay, now price action is here, so we have some more analysis. Is there any trading opportunities that we can take on the way down here? We need further confirmation that price has a high probability of reversing here. So let's remove this right now. It is no longer needed for our analysis. Neither is this, and neither is this. Right now, I need to focus on what lies ahead. And I saw that this price came here. I came into the office, price was somewhere in this area right here. As a matter of fact, it was somewhere in this area when price came in, when I came in this morning. So I drew a fib of this because, I drew a Fibonacci retracement of this. This is the high, this is the low. 100 out of 100 people would have to agree. There is no high, there is no low. This is a main swing, okay, of current price action. Okay, this is the dominant swing. Okay, I see that there is a little pattern here of resistance, okay, in line with a 38, and I see a test right here. See that? This was a test right here. This is a test here. Two separate sessions, and here and here. And if I go back, I see that there is still some more potential support and resistance in here and here and here and here. So that prompted me to be a little aggressive and take this off of a double top. I had enough confluence here to take the short. This is something I have not worked with you guys because I wanted you to focus on the mechanics and on the aggressive C's which are higher probability. Either way, on the lower time frames, when I do have confirmation like this, I do take these trades. They are part of my rules, but we have not covered this yet. So we took this here, and the expectation is a 1-to-1 harmonic move. Now remember, we have this potential C to D termination for the Garley pattern. Okay, so now I take this one, I copy and paste it off of the high here because we have to include the tails, and you see we start developing very nice confluence here. Okay, now I'm going to trade short here. My take profit is going to be down here somewhere. So in following price and seeing what the correction points are, now we see that drawing an extension of this puts everything in this very nice tight area where price should have a very high possibility of reversing, as you can see. Okay, and this pattern completes in this area right here. I mean, I didn't leave those ratios. I didn't want you to get too confused with the 786. 786 is up here somewhere of the larger price action. So this actually completed very nicely down here. Okay, and I was short. My short entry was right here. I entered right here at the rejection of the 38 in connection with this double top and the small structure. Okay, and this A, B, C, D, and all of these things here built enough for me of a case to enter this trade short right here, because I'm looking for this pattern, the larger pattern, to complete. Okay, so having said that, I'm short here. Price comes down, and as price goes down and comes down and tries to make it, there are little things that you can do along the way to see if price is cooperating with your analysis. You can take a little swing of this little correction here and know that you're below the 38. That tells you that you're still on very bearish price action, okay, and you are safe as far as staying into this trade. You can also do harmonic expectations of these little swings and see if everything lines up to where your target is. And as you can see, everything comes in right here. From a harmonic standpoint, this trade is very balanced, very harmonically sequenced, and there is little to no evidence that would suggest for you that you are in trouble and you need to get out of this trade. Okay, there's also a mention of noise in the lower time frames. It doesn't get much lower than a 233 tick chart. I guess it can, but however, look at the harmonics. Look at the price action. Look at the ratios. Is there any noise on this chart? Okay, the answer is no. I don't believe in noise. I believe that everything is in tune with that time frame. Okay. Now this may be noise to some people for a larger time frame as an insignificant correction, but from a harmonic standpoint, it confirms your trading. It confirms price action. It confirms movement. So I don't believe in noise. I believe that that is price action relevant to the time frame that you are trading, and you will it will help you confirm, you know, what you are trading. So there was a very high possibility that price was going to terminate somewhere in the zone. So this correction for me was not enough to get out of the trade, since I entered up here, and the expectation was for price to come and complete this Garley pattern. Okay, so I entered this trade I exited here at the 29. Price bounced around, came down to the pip to complete this pattern. I saw that price was unable to close below this, and I saw this momentum candle here, as you can see. And we'll cover price action analysis a little later on. But as you can see, the bull slowly started taking back all this momentum that was here, and they were unable, the bears were unable to continue to bring price lower. At this point, we had a doji here, some indecision, but price never closed below the previous candle here for the last 3 periods, including the doji. That's where I took entry to the high side. That was enough for me to confirm that this pattern had a high probability of holding, and that should now be long this market. So I took this trade here, okay, after bagging the 29 pips. So now I have to extend this down, okay, on my way up to here, okay. Now this is a break-even point for the pattern. However, we have a lot of little swings here and a lot of swings and ABCD patterns that also are in play here that we have to take into account, okay? Because there's a lot of harmonics happening here, so we have to take the most current as the most relevant. So I took this swing here and I measured it down, okay? And you see that there's an area here of confluence. We have a you can't see it well, but you see there's 2 Fibonacci ratios here that come together. 61% of this swing is a 61%, and the 786, which is my profit target, which is why I took profit here. Okay, I took profit here because I was expecting in a bearish order flow that we would have a possible continuation to the downside. Okay, so I took profit here. I took 18 points as soon as price hit this confluence area here. Now, without the benefit of hindsight, we don't know, but we just have to go based on the facts that we have in front of us. We also have support and resistance here. So this is all enough for me to take profit here at the 61% and disregard the larger pattern. Okay, the larger pattern was my entry. Okay, but I have to consider all of the relevant information that's current as to whether this pattern is going to reach up here or not. But we are here right now, and we are flat right now. We took 2 trades, one for 29, one for 18. Okay, I see resistance, resistance, resistance. This was enough for me to take an aggressive C sell to the short side. Okay, and look for a continuation to the downside. Okay, now I also have to keep in mind that I may be against order flow. We don't know exactly how the big pattern is playing out. Is it a short retracement? Is it not? I don't know. Okay, and we don't care at this point. We're just listening to price and letting harmonics lead us to where we want to go. Okay, so price came here. We're short here. Okay, break even was at the 38. Okay, price action came down, almost hit the 60. Immediate rejection of the 60. Price stayed above the 50. That was enough for me to take profit and know that we are probably looking towards this Garley picking up some more steam and taking a trade up to the high side. So right now we are. So right now you're here. We find some support. I am uncertain right now as far as order flow, which pattern will prevail. So as you can see, I am not in any trade here. I did not get any retracements in here. I did not have enough, even though I have some small structure here and support of the 50%. I did not feel that it was strong enough in light of all this bearish order flow to take a trade to the high side. I felt it was a very high probability, and right now order flow does not suggest one way or another. We are in a consolidating time period. We're in a consolidation period here, and I don't take trades unless I have a clear case for entry, and right now at this point we do not. Okay, so we have to wait a little longer and see what happens. Okay, so in seeing this here, we have a swing here. Okay, we have a correction here of a 786, and we have a correction here to 61%. So what does that tell you? Anyone? Potential Gartley pattern, right? So this is also an indication for me not to get long here as and wait for the short here, since I am unsure of this. I'm unsure where order flows going. We got patterns on top of patterns on top of patterns. Things are getting a little complicated. So we want to take the more higher probability trade. So we want to see if this Gartley pattern is actually going to complete somewhere in this neighborhood right here. Okay, because if we let me pause this and clean up the chart a little bit. Okay, so clean this up a little bit. You saw that we had here support building up around the 50%. We also have a potential Gartley pattern here that should complete somewhere in this area, and it does not make sense to take a trade here to be possibly taken out here. Risk reward, it does not make sense. Plus we're in somewhat of a consolidation period, and all the patterns pull towards bullish price action, bearish price action at this point. So looking to take a short here, I did not take the long here. Okay, price failed to come into this zone, and therefore started trading low, never broke this high, so bearish price action holds for now. And we see that we have another potential Gartley pattern right here with this low here. We had a 61%, we had a 61 to 78%, and the pattern completed right around here. Okay, so I haven't seen this. I'm still not in this market because I'm still a little unsure of this, and there's not enough support or resistance here for me to take this trade in bearish order flow. So in coming down here, then we have repeated support, all in line with this, which gave me a enough evidence to go ahead and take this aggressive C buy in and against order flow. So I took this trade here, okay, north, and I had to be aggressive with my stop because why? I am against order flow. Okay, so took the trade here, came up into the profit target. Wasn't sure exactly if I was going to get how far I was going to come up in here. Price came into this reversal zone. I didn't take profit. Didn't follow my rule. Don't know why. Can't answer that right now. Don't remember exactly what I was thinking. Price came back up, retested the 786, and failed to break through. At that point, I took profit right here. I took 12 pips in this area, and price came back down. Okay, now we are still in order flow here. Price came up, came down, retested this area. Price came within the aggressive C sell. Price was unable to, try to break lower, failed immediately. I felt confident in taking a trade at the support level right here. I took a trade to the high side, thinking that this pattern was going to hold, and this, which is also an aggressive C, because remember the second half of the pattern is an aggressive C. I'm sorry, an ABCD. So I projected this line, pushed it out further, and that gave me my profit target into this area. Okay, I took a long here up into this zone, and as price worked his way up there, I took profit just short. As I saw, I didn't quite take profit here. This happened rather quickly, and then price started coming back down, and I saw no higher trading above this. I took profit here to 21, and then this was also a Gartley pattern to the high side. So there was a bunch of patterns here. We had let me clean this up to show you the pattern here. Okay, this is the Gartley pattern. that showed up here in conjunction with this ABCD that made me take the short trade here that scratched. As you can see, the trade took hit the break-even point, and then price just came back and took me out on entry at a break-even point. So I lost nothing. That was my scratch trade for the day. So that is the session. The video is a little long. I'm sorry about that, but a lot was happening harmonically. As you can see, we had very clear indications on every single trade to enter. The only one that was a little outside of what I have spoken to you about was this one at the very beginning, the double top at the 38 structure. That was confluence. There was enough confluence there for me to enter that trade, and was supported by order flow. So that is basically my session for today. We have this is it, 5 trades, 5-1 for 92 pips, 1 scratch, and this is how we're doing on the other trades. 810 on the Aussie dollar, the New Zealand 1300, and the Euro pound 64 in the red. So that's it. Fairly nice Monday, and I guess I'll wait to hear your comments.